Alex, they're just coming out right now, and they are far worse than expected. So maybe we did catch a little bit of the firings that took place in March. 701,000 jobs lost during the month. That is a very large number. It's the kind of thing you see when we have major storms or something like that. Private payrolls down 713. Manufacturing payrolls were down 18,000. The unemployment rate rises to 4.4%. In terms of earnings, we don't have a number for the hourly month over month, but we do have the year over year. It rose to 3.1%. That may be an effect of who got laid off, maybe lower income people, and that pushed that up. Average weekly hours increased, or actually decreased on the month, 34.2 from 34.4. So we do see a major impact, Alex, in the numbers on the overall labor market from what happened in March. Kind of surprising, and we'll want to dig into this and see exactly what happened. So I'll throw it to you for a moment, and I'll come back with more analysis in just a second. But 701,000 jobs lost in March. That's the first time since September of 2010 that we've lost jobs in a month.
Terrible, Mike. That number is terrible. I just average hourly earnings on the month-on-month basis that you were looking for. It actually rose 0.4%. What's interesting is the market reaction. So I'm taking a look at futures now. They're off by about 23 points within the S&P, and that's still just about maybe 1% down. We're off the lows of the session. I'm just taking a quick check in here on what's happening with the dollar. You have the dollar dropping a little bit from the highs, but not really. We're still at 100 on the dollar index. It makes me think that we all thought we were looking at negative 100,000 jobs, but maybe the market was pricing in something much worse, because even in the bond market, you're seeing some kind of bid in the long end, but just by about 1.5 basis points, you're still at 56 basis points, although very close to the record low that we saw back in early March.